Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone's doing great. All right, so let's get into it. Just a quick visit over to the economic calendar, forexfactory.com. And you'll see as we scroll into Friday, pretty quiet on the data front. Not a lot of data hot zones coming out. What that means, though, is the ones that we do have coming out, kind of an oddball, those 9:45 releases could have a little bit more impact than would normally be when we see a flash manufacturing PMI or the flash services PMI. Then quiet until daily, and then boom, that's it. At the top of 11 o'clock, we've got Powell. So heads up, kind of quiet until that 11 a.m. hot zone. And the trick is always, is there enough time? So when I'm day trading in the morning, and I will say, of all the trading days of the week, Friday is my least favorite. Or as I like to remind traders sometimes, Fridays hates traders. Monday's not so crazy about them either, but Friday, the end of anything, the end of the week. Well, really, more granular, the end of the day, the end of a week, the end of a month, the end of a quarter, end of a year, end of fill in the blank. The psychology is far different than the beginning of something. So keep that in mind. Friday is often pretty tricky. I will not be nearly as active on a Friday as I would be Monday through Thursday. Doesn't mean there won't be opportunity, but heads up, because Powell is going to, what happens after the bell? We'll get the clearing. We'll get the high-low range, and then everybody knows, oh gosh, 90 minutes later, here comes Powell. And that will often change the way traders will either exit positions, trail stops, jockey for position around whatever it is Powell's going to say. So that's a major hot zone. And what is he doing? He's going to participate in a CrossFit. No, I'm kidding. He's going to be in a panel discussion titled Monetary and Financial Stability. Oh, gosh. Okay, so heads up. Heads up, all right? So as always, thanks so much for being here for Charts and Coffee. And let's dive into your questions. First up. Yes, I do drink water. I do drink water from time to time. And I don't just mean the kind that runs past coffee grounds. All right, can I please make the next step building a watch list video to further refine top candidates that I used? I do that, Tim, pretty commonly in the mastery and in the futures room. So that's typically what I do every Thursday. We have a larger sort of macro look at the pieces, the sectors, possibly the rotation of the sectors, possibly more the participation of the sectors. So yeah, that is a regular discussion in the videos that I do for both the mastery and the futures room. And then as far as the relationship between the wave and propulsion dots, the wave and propulsion dots, they're very much keying off similar indicators. Are both exponential, moving average, reliant. And so the difference is the wave for me is how is the structure of the market being reflected through not just those three lines, but the color of the grab candles, because that's inextricable. And then propulsion dots are exponential moving average replacements. And that's really very important, because if we're in a trend, or if I'm looking for support or resistance, we know moving averages are very powerful. But what I love about propulsion is the way that I look at it is it's a self-correcting moving average. And by the way, all those indicators that Tim just mentioned, gang, Tim probably knows this, but I want to make sure everybody here at Charts and Coffee know this. You can head on over to countdowntrader.com and you can grab the propulsion from that website. Okay. Free, gratis. All right. So can I describe the sanity check. Okay, so this was an indicator idea from a member from many years ago, because one of the things we all are curious about is what's a 1% move of the market? 2, 3, 5, 10, 20. I think the sanity check only went to 5. I added 10 and 20. Well, Lorna actually did. And it's just to put into some sort of reference what the current price level is, especially when we're at all-time highs, especially when the sentiment is expecting some sort of major rollover. We're expecting pandemonium. When that happens, a really great, well, sanity check, as the name implies. I love the name. I didn't come up with that. I love the name. It's just to put all that in perspective. That's what it is. It's not a Fibonacci retracement. It's along the lines of the most talked about levels of pullbacks, 1 to 5, 10, 20. And that's what it is. It's just a, well, sanity check. Yeah. All right. So good morning. Sell into resistance or don't fade Fridays. Well, I mean, it depends where we are, AK. So when you look at the NQ in terms of whether we're actually at or near resistance, we're not there yet. I mean, we've got a ways to go before I would look at our testing those all-time highs and whether or not we could sell into that. So I don't have any proximity to that on the NQ. We do have that proximity on the ES, but if you checked out the free video from yesterday, and I will tell you, definitely check it out, because that describes the way in which once we reach those all-time high areas, do I want to fade the SPY or would I rather fade XLV? Once the NASDAQ gets to that resistance level, if or once it gets there, am I shorting NAS or am I potentially shorting XLC? Well, we're short XLC, this is a position we've been building. It doesn't look like a great downtrend, but downtrends are far, they're not merciful. When you take a look at an uptrend and sort of the calm organization usually of an uptrend, if it does have a moment of volatility, it's usually in the direction of the uptrend. It's uptrends are the kinder, gentler of the two trends. Downtrends want to rip your face off, quite literally sometimes. So we have to calibrate in such a way that we can handle the more emphatic moves to the upside, these short squeezes, the bottom picking, whatever. But we're short XLC. That's a better corner of the NAS. So I hope that helps. I hope that makes sense. So I don't know whether or not ultimately we move lower on the NAS as well as we might move lower on the XLC, or whether we might move lower better on the XLV, which looks a whole lot like XLC, right? So I definitely will say, don't fade Fridays though. Should really apply to the last hour of the day, because that's the sentiment that is going to have, recency bias, right? That's the sentiment that is most likely to affect the psychology in the most impactful way, meaning whatever that last hour movement is, that's where the don't fade comes up, okay? Jimmy, I hope your day is filled with joy as well. All right, Victor, taking ZM as an example. Okay, so taking ZM as an example, how can we get an edge in trying to distinguish an overbought during chop or a rip in a downtrend from a possible breakout? Okay, so the bottom line is, how do we know if I'm understanding the question right? How do I know if this isn't maybe a burgeoning 1, 2, 3 and a reversal, which, by the way, based on the structure of the 8, 13, 21, 34, it could be. That's what this is measuring down in here. Okay, it could be. Or do I fade the strength? So this is going to probably be not the answer folks want to hear, but it's probably the best answer and the truest answer. Oftentimes, reversals come at sort of the cost of stopping out a trend follow. So what do I mean by that? Reversals oftentimes, the prerequisite to a reversal oftentimes is that, let's say this is the 1, 2, 3. The 2 is what we're focused on, that swing high. So if we're going to actually have that pattern for a reversal, a lot of times it's going to come as we are looking at a potential short within the confines of the wave, and it just doesn't work. And so what that means is we can only respect and react to what we have and trust by, it's not luck, it's not fortuitous, by planning that our stops are not going to, sort of, I think we've all been there before, kill our will to take that next trade, that it's not going to annihilate our account or our psyches in such a way that we feel paralyzed to take the next trade. And in this case, the next trade could be a buy as it takes out, say, 283.85. So I would say, though, as long as we can remain below the point of control, and that's what this white line is right here, the white line on the chart, that's the point of control dating back to about mid-August. Okay, that's the most volume that we've seen on this screen, on this chart. And then the 55 exponential, which is this right in here. As long as you can stay below that, I think the bears have a pretty good chance at holding these resistance levels. So sometimes we just have to say that oftentimes a reversal comes at the cost. Hopefully, again, you're keeping the paper cuts in place, comes at the cost of a trend following getting stopped out. That's oftentimes how it happens. And it also basically is in tune with what I believe to be true, which is nobody knows what's going to happen. We just use our tools and our strategies, whatever, as probabilities. If this is most probable, and then if that's not the scenario, what's then the next most probable thing? And if that's not the scenario, well, then what's the next most probable thing? All the while remembering that we cannot lose a lot. Whatever that number is for you. For me, I cap it off at a account risk, but we cannot lose a lot in that pursuit of the trade. So I think as long as you've got that balanced and understood, you're in a good spot. You're in a good spot. Okay. So thank you for the question, Victor. Good stuff. And yes, Michael, absolutely. Thank you. Yep. Kapowell's at 11. Absolutely. Never boring when he's on the mic. That is for sure. Next question is thoughts on TLT. Sure. So we start off with ZB, and I do have exposure to both. So all my cards on the table. Where we're stopping now, I don't believe anyone is surprised, right? I mean, we have this Darvis here, that previous Darvis signal in here. This is support, right? I mean, we can call it Darvis, but if we just sort of bring it down to its essence, that's support. It's an obstacle to more movement to the downside. It's an obstacle to more movement to the downside. So having said that, there's nothing for me to do here. The bulk of our positions were built inside or as we approached the wave. So take that over now. That ZB is the 30-year futures contract. The 30-year futures contract is going to give me the analysis and the confidence to take this trade, which is a movement into the wave on TLT. And it's the same trade. And in this case, we're using the ETF alternative of TLT puts. And as ZB hit that support, we've already scaled out. Now, remember, I said scale out. We're not getting flat. Part of, I believe, a trend follower's job is to do as best they can, like a rodeo cowboy, hang on, in this case, to the bear. It works better in a long analogy because the cowboy hanging on to the bull makes sense. The cowboy hanging on to the bear. Can you imagine if they open the chute and out comes this cowboy on a bear? That'd be hilarious. It would probably not end well for the cowboy. However, that is what we're doing here. So use the ZB to manage the TLT, and then what we have is an open short scaled out of half the position, That means we have another half to see how much lower is low, and I'm holding out for that. So that's my thought. Right now, we've got a break-even stop, scaled out at the first target, and now, the second target should be ambitious. It should be greedy. It should want a lower low. So we're looking for that, and we have the latitude to do that because we've controlled risk in two ways, right? So that's the way that I want to manage that. All right. Do I have any thoughts on the ITB? Hey there, Deborah. How are you? All right. So ITB. This was on my radar for a short, straight up. Why? Well, you can see. And I would still be looking at a short. It's tempting to look at the gap close in this area for resistance. In there, got a volume ledge also right in there. High on my list, probably not. What I would say though is, and you know what I'm going to say, and that is, let's open up the ITB. Let's take a look at the stocks within it. And is there a relative outperformer to the downside? What I'd rather as ITB heads up into that gap resistance, maybe something sitting at the 200, like Pulte, makes a lot more sense. And this is the kind of stuff that we're going to do in live trading, because I think we get, we're all susceptible to this, myself included. We have our secret squiggles. We all have our indicators, right? No one's indicator is less important than somebody else's. We find the tools that we like, right? We trust that they're going to give us the answers that we need. But before we get into how to trade a particular symbol, probably the question that should precede that, and that's the bulk of my work, especially with this current class that's going on right now, is why should I trade that symbol? Why that ETF or why that stock? Why that index or why that sector, right? And so what would get my attention would be potentially Pulte. I actually like that one a lot. I'm going to write that one down. I like that one. That's it. That's an interesting one. Yes. Pulte. I would keep an eye on that one. So that's my thought on ITB. So sometimes the thought on ITB, or sometimes the thought on the first symbol, is does it open up? Thank you, Alexa. Alexa, mute yourself. So what I want to remember is that ITB could be the first question. It could open the door. And then what comes after we start this process, right? How do we extract what we should trade? How do we extract the symbols from the broader market to what should deserve a spot on our watch list? And so before the trade comes that watch list. And so that's really the process. That's my thought on that. Good symbol to open up the door to where some potential short sells maybe, or long puts. Question on scaling. Oh, cool. Love that. Scaling, scalability. That is my jam. If I miss an entry on an aggressive or moderate, do I take a full position of the conservative? You can. Yeah, no problem. I mean, that's an easy one. Absolutely. You can. TM, 100%. You can. The main thing is, the threat. I mean, if you're asking this question, the thresholds. You either taken one of my classes, you're in the master. If anybody has a similar question. So the thing that I will remember is that what's that maximum risk that I'm even allowed to take? What kind of capital do I have available in my trading account? Could I at any time, buy a couple of options and know that maybe I still could have 5, 6, up to 9. I don't like to have more than 9 positions open at any one time in my trading book. But could I have up to about 9 positions? So, what's the budget? What's the risk? Just run the math. But the answer is yes, as long as you're not exceeding the risk math. Yeah. All right, Jim, I appreciate that. I like charts and coffee to start my day too. That was the whole point. It's been a year. Charts and coffee. This year is the one. This month is the 1 year anniversary of charts and coffee. We've been doing this now for an entire year. And I really appreciate y'all coming along for the ride and making it what it has become. I really appreciate that. Okay, so just uh, as we're getting warmed up sometimes, we are flat out at a time. Couple of general questions. How do you find the point of control? Jonathan, two things, and I think this lends itself really well to the previous question. I look at volume, and if you've studied my submarket sonar or any of my day trading classes, and we have my day trading class available if you're curious about how we do it intraday or end of day, you have to anchor your point of control. The trick is, what date or time forward are you studying the main level of point of control from? Point of control is something you can pull up in a lot of platforms. You can pull it up, I believe, on Toss. They have a volume profile tool, I think, which I frankly don't love. Well, the one I'm using here is on TradingView. And the trick isn't the indicator. The indicator is really just one of those things that you can find on any platform. The trick is to have it anchorable. So a lot of tools that I use, like a VWAP, volume weighted average price, or volume profile, including point of control, value area high, value area low, these aren't things that are super secret nor unavailable. But what I've found, sadly, is they're not anchorable. So know where to anchor it, know the data you're studying. And the way that you find the point of control is to anchor that study so it's looking at a very specific amount of time or days. And then you'll know where the volume is concentrated. Where there's volume, there's opinion, there's conviction. People have dug their heels in there. It's support and resistance, right? So as always, thank you for being a part of Charts and Coffee. Have a terrific weekend. Remember, Friday hates traders a little bit, especially Friday with a little bit of kapow fairy dusted over top of it. So have a great weekend. I'll see you all on Monday. Monday begins the live trading. So you have today, tomorrow, and Sunday, even part of Monday, to review the class. It was 4 hours pretty much on the button. And you can review the class. And then we're going to start our live trading on Monday, which means we're going to start watch list building and alerting trades. So really excited about that. Have a great one. Be good to each other. And I'll talk with you soon.